Hello, you legends. Happy Sunday, everybody. Thank you, Sean Donnelly, TNT Tesla, Martello, everybody for coming. Doc Intern, great to see everybody in K8 as well. This is an interesting video today. We're going to break it down, the question of where we are in the world. While the markets kind of suck and continue to stagnate and suck sideways, we get to think about, are we entering a new unprecedented golden age? Or has this happened before? And how do we position ourselves? Some really fascinating questions that had me thinking over the last 72 hours. And I have some new exhibits which might take some people aback. So let's get into it. Thank you all for coming. And of course, this is not financial advice, just a guy on the internet. And all the questions come from Patreon. Thank you, everybody in Patreon, who make me possible and the team possible every day so we can make the world a better place as best as possible. First question is from Jake Bushby. After listening along for a few years now, I've decided to take your advice and move my pension away from SJP, a UK wealth manager who had me invest in a bunch of low growth index funds. I hope everybody can hear me. Let me know if you can. I plan to move my pot to an SIPP provider, SIPP provider, so I can choose assets myself, with the idea to go 50-50 IBIT Tesla. IBIT's the BlackRock Bitcoin ETF. However, it transpires that Bitcoin ETFs are banned in the UK, and I feel MicroStrategy could be too risky to enter this late in the cycle. What are your thoughts? Well, first of all, I don't know how. Maybe there's different SIPPs, but I know some people in the UK definitely do have access to IBIT. So maybe check out a different SIPP provider. It's very important not to be limited. And let me explain why. First of all, don't get trapped. This is the classic mutual fund trap game. When you understand how this whole business works, you've got employers that work with mutual fund managers and they push products on people, but these products often are bad. They are mediocre funds with high management fees. They rely on a thing, I don't know if this is even a term, but investor inertia. Investors sometimes they just get into something like a pension fund or 401k or a SIPP or whatever it may be all over the world, and they just don't move. And that's how these funds retain capital and just charge you fees out the wazoo. Also, actively management funds often lag benchmarks. For example, a lot of Vanguard funds underperform indexes, which is ridiculous. And investors stay trapped for a number of different reasons. Maybe it's convenience. Maybe it's lack of financial literacy that keeps investors locked into garbage. And as I've said before many times, and I've been looking at this for 35 years, if you have a mixed bag of 60 or 70 different holdings, you're never going to get ahead. Okay, you just average doesn't win. You got to be in the top 1% of assets. And also, as you've heard me talk about many times, debasement. Even if you're making, say, 7% a year, 8%, it's not going to cut it with the amount of money printing that's happening. And of course, fees erode long-term gains, etc. They just all over horrible. But let's get back to you. Why you're doing the right thing, and I'm kind of, what to do now, and I'm sharing this with the greater audience because you get a lot more returns by investing your own way for a number of different reasons, as long as you pick the right assets. Okay, it's all about doing the homework. Up front, I spend an inordinate amount of my life finding winning assets, and they're harder and harder to find. And if I found one, I keep on investing time in it to make sure it is still the right one. But here, you've got things like NVIDIA outperformed the S&P 500 by 6.3x. And then you have names like MicroStrategy that smoked NVIDIA. Bitcoin, 100% annual gains for years. Depending on how long you go back, and no management fees for stocks, which is also a big thing as well. And the other thing that you have to be in the narrative kind of before it pops. So things like AI, crypto, and not in a diversified bag of trash that has 60 mediocre assets in it, 40 to 60% of which are complete zombies. So that's kind of where we are now. Back to your IBIT Tesla, there's something wrong with your fund if you don't have access to Bitcoin ETFs. However, MicroStrategy is still a play that you can consider. It is riskier, but at the same time, the returns are great if you can time it correctly. All right, that's very, very important here as well. And I'll show you a model in a second that actually a slide is missing. Anyway, I think it'll come later. It comes later, related to this, about how you can actually pair trade within your SIPP, which can be done too. So consider your rotations. This is from my Retire On update I did a few days ago. And, figure out your SIPP. I will look into it actually and find out later, or hang out on Discourse. There's tons of people out of the UK that have SIPPs, SIPPs, I hope I'm saying that right. And they can't not have BlackRock's EBIT or some other version of a proxy for Bitcoin. But if it's all you have, buy MicroStrategy when it's completely oversold, and I'll show you a chart on that in a few minutes, and sell it when it gets hot. It's like shooting fish in a barrel. Well, I'll show you that chart. And then per my CAGR model, which I did work on for Chewy, who also has an SIPP out of the UK. Shout out to Dr. Chewy. These are my CAGRs out to 2030, which are pretty insane, and targets, and what it would take to get to $1 million, not pounds, dollars. But anyway, let's get into the second question. We'll come back to rotation as well, and hopefully we can find an SIPP with IBIT. Next is Dumichi. Hi James, long-term follower, big fan. But I'm stuck in a perp because I was kind of greedy. My goal was to exit from solid 300, and I've had my finger on the button at 293 but didn't do it. I was stupid enough to never leave this position, and I'm at a terrible point now, either to realize a huge loss or wait till septemberish to hold on to my seemingly terrible position. I have to put all my funds behind it, at which point this makes me nervous. My liquidation is still far lower, but the pain I feel is close to unbearable. What would you suggest? Should I sit it out even if it takes 6 months because of the macro uncertainty? I should take the loss and start to rebuild bags. NFA, of course, just share your experience, please, about bad decisions. So this is a deep question that goes way beyond just perps or anything else. Sometimes you can get into a bad position or a losing position. Again, investing as a blood sport. With perps, I always hammer home the rules. Let's get into the rules first to remind everybody. Rules are there to make sure you never get boxed in or trapped like this. The rules are never have more than 1% of your sol bag in a perp, and never use more than 3.3x leverage. It sounds like because your liquidation level is so low and you've been in it for so long, you don't have that problem. But if you listen to these rules, you'll always be fine, but you are sadly boxed in. Now, in terms of your situation, thinking about where you are. So given your low liquidation level, maybe you're only down 40%, 50%, 60%. I'm not sure exactly, and I'm not sure the fees you're paying or what platform you're trading on. I don't know a lot of your entry price, but at the same time, it sounds like you are putting more money into it. So throwing good money after bad, there comes a point where you should say stop. Now, when you look at Solana here, like at the 120, 125, 130 range, it looks like it's pretty much close to bottomed. But then again, you never know. If Bitcoin spikes down to 73K, we could see a low 100 sol. So beware of that. Now, that being said, a lot of the price targets for 2025 are still out there. Changelly 230, Invest in Haven 300, Coinpedia 400. And sometimes the minute you actually sell or exit a position is the time things skyrocket. But in terms of the lessons learned, I'll go back to how I look at this. And I've seen this movie before. Greed is sometimes the villain that keeps you in a position too long. Greed is the emotion that prevents you from hitting the sell button. And that's why we build things like profit-taking model, to take the emotion out, to let the system decide on your behalf, because that's what you need. You need a process, you need a system. And the other issue is time kills if your funds are locked. I often say opportunity cost is the silent killer, the silent assassin. It will eat you alive if you're stuck in a position that's going nowhere, or even losing money, and it's all of your allocation. You're missing out on a lot of other opportunities as well. So sometimes it can be best to cut a loss and reallocate. Do not be all in on one asset. We'll talk more about diversification in a minute too. And rebuild. Maybe sometimes you can reposition a position to amplify returns. So for example, if you get into a sol perp at 200, it falls down to 120. Your liquidation level is 100. Sometimes, take your 30%, 80% loss, whatever, and then reinvest it in a better position that has a higher likelihood of returning more or getting back to basics. Or you have to just sit it out. And I feel that you are stuck. You may be in too deep because you got too much of your money in it. So selling now would be kind of like torpedoing yourself. Again, I don't know your exact numbers, but that's why you should never, ever, ever get boxed in. Only play with leverage for fun. It's like going to the track and betting on a horse. Never do more than 1% of your positions. So I don't have an answer for you because I don't know your exact numbers. But if it is like you're down, say 60%, it might be worth reallocating and pressing the button. But at the same time, you'd be selling close to the bottom here as well. And that's unless, of course, if the bull market is over, then it would be time to press the button and reallocate. But I don't believe the bull market's over. So I hope that helps. Next question from Churros Madrid. This is another interesting one. Thank you for everything you and your team do. I've learned more from you in the past few years than I did in my entire life. Woohoo! This is my first question here. Thank you for that. As a father of a young daughter, I'm focused on securing my family's future. Currently, portfolio is heavily weighted towards Tesla, 80%, as it's what initially sparked my interest in investing and what I understand best. Good. By the way, Tesla is the most complex company to understand. So if you understand Tesla, you are way ahead of everybody else. Now, however, I feel this 80% concentration is excessive. I also hold positions Bitcoin, Sol, MicroStrategy, Google, Square, and CleanSpark in that order, along with some cash and NASDAQ, QQQ. I understand your reservations. I'm fine with QQQ. Given that I primarily understand Tesla and I believe in its potential, should I double down at these prices? Alternatively, should I increase my positions in MicroStrategy or Bitcoin, or explore new opportunities like PLTR, Hood, or AMD? I'm also considering selling my Square and CleanSpark holdings to reallocate potentially to faster horses. I know you are rotating into Tesla, but I'm so exposed to it, I don't know what to do. This is, P.S. also kind of worried about all the hate Elon is receiving. We'll talk about that as well in a minute. A lot of the themes are very similar. So this is, you are just like the previous question, you're in another form of boxed in. By the way, first of all, congratulations on your family goals. Securing your daughter's future is the ultimate win. Yes, excellent. However, your 80% in Tesla is excessive, no question there. And I believe in heavy allocations and heavy concentrations, but there's nothing I'm 80% in. I am 95% in just 4 assets, but that's my version. So you always have to look at kind of investing like seasonality, when you want to be in certain assets for certain seasons, like crypto bull run now. We get in during the bear hard and we wait to rotate out, getting closer to the top of the bull, and then we move to the next fastest narrative that's going to kick in. And I hear you as well. It's tempting to double down with Tesla falling to 220. But especially with the new targets from Morgan Stanley, etc., going to $800. But at the same time, you're 80% already in the bag. Piling in will just amplify your risk. So I would think about spreading into different areas. Now, of course, not financial advice. I like your idea of Hood and CleanSpark exiting those, but wait for a bounce. I think Hood actually had a big bounce last week or so. CleanSpark has yet to actually move. I don't know if the miners will actually move, but again, allocations matter. I am about 1.7% of my portfolio in Bitcoin miners today. Now, crypto, you seem to be very under-allocated in this realm. I think you need to, like you pointed out as well, think about more Bitcoin, maybe Solana here at the 120 level, 120s. If the so-called Raoul Pal banana zone is incoming, it would be very good to participate. And then if we do go really bonkers, then allocate into Tesla, hoping it's still very cheap, or other AI plays. Now, you mentioned some other names too, like AMD, etc. Palantir. I mean, Palantir is trading at a P of 160 or more. AMD is playing second fiddle to NVIDIA. I always believe in being in the winning assets, not the number 2 player. So I'd be careful there. And regarding MicroStrategy, it is crazy volatile. I mean, this thing went from 240 to 300 twice in 2 weeks. So if you're in a retirement account and you can stomach it, pair trade this. So here is the Arb Cloud pair trading model between Bitcoin and MicroStrategy. If you have the time, that's what you can do. It's like, again, shooting fish in a barrel. Not that I'd ever do that, everybody, but that could be a very good one to do. And the model is basically tells you what to do and when to do it. So they'd be the things I'm considering. I wouldn't go harder above 80% into Tesla, unless, of course, it falls to a very low level. And then every asset has a price at which you could go completely crazy. But that would be very irresponsible, in my opinion. So I hope this helps. And there's more questions coming as well, which pertain to your questions. So stay tuned for that. Next question is from AG Capital. Is Pi Network currently ranked number 11 on CoinMarketCap a legitimate cryptocurrency project with real potential, or is it a scam? Well, let's go to the crypto compendium. It saves the day. Literally, out of the top 500 cryptos, this thing is at the bottom of the barrel. It's a 24 karat turd when it comes to tokenomics. Okay, it's no good. You can't even see a chart on it. It's just 7% has been distributed. Inflation will murder you. The holdings, and it's just terrible. So if you are in any asset and you have doubts, or you're considering getting into an asset, check out the crypto compendium. It'll tell you if it's going to go anywhere or not. This has been my Bible since early 2021, and it helped me avoid a whole world of hurt in a whole bunch of cryptos. And regarding mining, it's a mining asset from Lorax here. After mining for 4 years, you can mine on your phone by pressing a button every single day or something like that. I have mined Pi for 4 years, but I do not expect anything to come out of it. It is a lottery ticket, so be careful out there. If it's crypto is crypto, just be careful. Be in quality assets, and there's very few mining cryptos that'll do well. Next question from Wayne 2020. This is the first part of we had a lot of questions regarding rotation and allocations, but I thought this one was very, very funny. This made me laugh so much, and I love that you work with your hands. I love to work with my hands too. So immense gratitude for all you do. I won't complain when you decide you've done enough and go off to an island. Yeah, we'll see. But with that in mind, where can I find training sources for relative beginners? Your podcast is great, but it goes over my head to make me dangerous. Can you point us to other trusted podcasts or a training topic or the IA community forum discourse, etc.? And next, I'm 75% Bitcoin, 30% Sol, 10% Tesla, 2% CYFRF. Woohoo. And plan to reallocate to 55% Bitcoin, 21% Sol, 22% Tesla when the market tops. So first of all, I like the way you think. I want to stake my Sol with CYFRF. I don't quite get that, but haven't researched how yet. You can't, so don't bother researching that. I've ignored pair trading because I'm not tax-free, but that will change if crypto gains are tax-free. That would be cool if that happens in the US, by the way. I'm afraid to explore calls and perps. Don't. If you're a novice, do not touch those things. Do not touch options. Do not touch perps, because you will get murdered. So I'm glad you are not doing that. And I don't know what Trader View is. That's Trading View. And I don't fully understand the more complex charts in your podcast. Okay, I'm a 63-year-old UAW toolmaker with a pension. When I retire, I'd enjoy machining more than hardcore day trading, but I love your podcast and enjoy the panhandling in the coming golden age. I'm also managing my 24-year-old's daughter inheritance, but that's a different story. So there's so much to unpack here. I'm going to just touch on some of these things. First of all, I'm going to talk about your daughter first. Get her into winners early. She is so young. Congratulations on that. I shared this chart on Costco a few days ago. Literally, if you could wait 20, 30 years on an asset, you can turn $100 into $67,000 or $10,000 into nearly $7 million. Again, we now have those opportunities. We'll talk about that redux of the golden era. So think about that when it comes to her. Also, golden age panhandling. I love it. And you're a rock star toolmaker. I love that too. So why not, why not build your own podcast about tool making? That would be cool. And there's so much you can do as well. And I hope you have a great retirement. But the best resources within the community are a discourse. Check out the recent video Jacob did as well that shows you some of the resources there. And if you want a slower lane, that is, there's every speed of every lane you want in the community. Regarding podcasts, listen to very smart folks who have made it. A lot of people that make podcasts, used to be like personal trainers or something, and now they're trying to make a living. But follow people that have actually made a fortune before making a podcast. They're the best people to follow. That's all I'll say on that. Now, the Golden Age portfolio. I love the way you were thinking regarding rotation. You do have a spicy mix with a little CYFRF in there. You are very heavy Bitcoin, way heavier than me. But I do have MicroStrategy, so that changes that. Sol, Tesla. Tesla is a bit low, but you're thinking the right way about rotating and reducing your Bitcoin bag size. Bitcoin's going to be a great hold no matter what, but there could be a little more, and you do need a little more balance. So it sounds like you are looking at what I'm doing. And so do your plan. Go heavier Tesla, lighten the crypto load, and maybe think about another AI play as well, which we'll talk about what could happen. Maybe a little NVIDIA down the line. That's not old. And the next, this is, I love the way all the questions every week always dovetail together. This is your Golden Age portfolio. I'm now going to talk about the new Golden Age. And this is a very clever question as well from Alpha Hunter. And I love this. I'm a new Patreon member. First question. I know people are focused on the recent market FUD and cannot contemplate what the world may look like several years in the future. With the geometric growth in AI, quantum, explosion in crypto technologies, and resulting multi-industry disruption, do you see a future dominated by a few players? Elon, robotics, autonomous driving, energy storage, space exploration, global communications, medical human AI interface, low-cost manufacturing, etc. All complementary product services across the portfolio. Michael Saylor, strategy, Bitcoin bank, investment house, replacing TradFi. Larry Fink, creating a new crypto exchange, tokenizing everything. U.S. government stablecoins, world currency and economy. Will these current industrial tycoon players usher in a new world order, which will mirror the 19th century industrial age dominated by a few captains of industry. I'm curious about your insights as my crystal ball is cloudy. I love this because I think about this all the time, and I spend a lot of my time studying history. Absolutely, history is like my hobby, understanding how things worked in the past, because everything tends to repeat a lot. You can learn a lot from looking at history. But let's talk about what you're kind of hinting at, the captains of industry. This was called the Gilded Age. And again, love this question. I believe there are things mirroring this age today that happened way back when. Now, this was in the 1890s. There were players like Vanderbilt, Carnegie, Rockefeller, JP Morgan, Edison, etc. And back then, the top 1% had 50% of US wealth. And today it's a little bit different, but I do believe AI and crypto and some huge geometric growth in these new industries could really change things up very dramatically. Now, you could argue an oligarchy is incoming, but the data does back it. Gini coefficients are also backing that too. We could hit 0.6 globally, depending on what happens. But I decided to take your new Gilded Age and tweak it because things are a little bit different. So I hope this becomes clear. This is the Gilded Age Redux in my small little mind, and it mirrors the Gilded Age of the past. And back then, we covered it all. But now, instead of railroads, and as you hinted at, there's a global communication system and travel system that's SpaceX. Steel has become the metal that drives the AI revolution, which is NVIDIA. Oil, Bitcoin has become energy, which becomes money, and that is oil, in my opinion. So I think Michael Saylor and strategy could be potentially the new oil in the future. And Saylor refers to this all the time. Banking, BlackRock, biggest money runner on the planet. Technology, Tesla. And of course the Musk Industries. And knowledge, Grok. Now what's pretty alarming about this is if you look at the players, railroads, Elon Musk, steel, Jensen Huang, oil, Michael Saylor, banking, Larry Fink, technology, Elon Musk, knowledge, Elon Musk. It is no coincidence that he's behind a lot of this stuff. And the future could be crazy, and I do believe there'll be massive concentrations of wealth in these areas. That's one of the reasons I make videos every single day, because people need, and I'll say this with extreme intensity, people need to really focus hard on becoming capital allocators. Okay? That's the only way out. If you are not part of this, what I call Gilded Age Redux 2.0, I should have written 2.0 on top here. Okay? We saw what happened in the past. 1% owned half of everything. If you're not part of this as a capital allocator, you're going to miss out. Okay? The revolutions happening today are far more extreme than the ones that happened back here. Okay? This is far more extreme. I hope people get that. So that is the new Gilded Age, and I'll even throw in a new curveball too. This is the left field twist, which could get even more crazy. What happens if these tycoons don't just dominate, but they decide to work together? Like Elon buys BlackRock and Saylor funds SpaceX colonies in Mars. The sky is the limit as to what could be happening. Maybe there's a new type of solar that allows Bitcoin mining on Mars. Who knows? Communications through SpaceX. Either way, the colliding four major S curves and the huge dominance of players could mean wealth will completely snowball as long as you are positioned out there. Okay? Very, very, very important. And just as a fun fact, by the way, Forbes in 2025, the top 10 billionaires, their net worth doubled in 4 years. Doubled in 4 years. So just look at that as kind of a harbinger of things to come. Wealth can be made, but you have to position yourself carefully. It's such an important time to be alive. All right, next question from Lash Clone. Hey James, I've been getting emails from other sources that Starlink is going to IPO in early May. Is there any truth to this rumor? And if so, could we access the IPO as retail investors? It is a great business and growing fast. So first of all, I would know about it because that's the only IPO I'd actually ever consider buying. And I have my feelers out for a long time, and that's one of the reasons I'm in things like Neptune Digital that has SpaceX exposure. That's why I have that position in that company. They're about 16-17% SpaceX and Bitcoin and Solana. It's like all my favorite bags. The SEC database, Edgar, has nothing on it. There's no S1 filed. There's not a peep out of Elon. And most importantly, Elon does not need any more attention right now or headaches. He has enough on his plate. We'll get to in a second. And if he did plan an IPO in May, timing would be terrible. Absolutely freaking terrible. So I think you're getting emails from scammers. I don't read email anyway, but I think this sounds very fishy. I don't believe it. And be careful. People will prey on your hunger for certain assets. Maybe you expressed interest in SpaceX in a forum. Maybe a scammer was watching what you were saying and it's like, oh yeah, let's target this person and get their money. Say, yeah, we'll give you some shares early. Again, you can buy shares in the secondary markets like Hive or Neptune Digital. That's what I'm doing. Next question from Chicken Tikka Brit. Oh, Chicken Tikka Masala. Good food. Hi, James. Quick question on Tesla. When do you think the Doge noise will end? Is Elon's role to identify potential savings and that's it, in which you can step out of the limelight for a bit? Tesla at these levels is great, but the longer Elon makes waves, I fear there could be some long-term damage done. Hoping it will create good buying opportunities for Tesla short-term with all the negative press, but I'm hoping no medium long-term damage is done. Basically, how long have I got to stack Tesla? So first of all, the fizzle out time frame, it's hard to say, but his plan was to run kind of Doge for 6 months and just get things going. The pace at which they are finding fraud and waste and abuse in the government is out of control. So at this rate, they will be done by summer 2025. Also, the protesters, etc., it's pretty clear as well. They are being funded. People are being paid $40 an hour to protest. They're given signs. So there's a group called Act Blue behind this. These are not individuals that say, oh, I'm going to protest Elon for discovering fraud, waste, and abuses in the country or in the government. So again, I think it'll fizzle out in the next 6 months. Also, there's something fun happening, which is good too. We have a weird sassy twist with this Tesla takedown. If you look at a lot of different people and groups, even people that don't own Teslas, they are revenge buying Teslas to support Elon, because I did a survey with 3,500-4,000 responses, and only 11% of people think what Doge is doing is bad. 89% think it's very good to save money and secure the future of things like Social Security and stuff. So we'll see. So this is kind of like backlash to the backlash. I think it's real. Bumper stickers are saying, I love my Tesla, etc. So I think it's going to be good. In terms of the question, how long do we have? My plan is stack while the haters rage. It's a loud sideshow. And you'll be smirking when profits come. Just check out CERN Basher with Herbert Ong, his recent video from 2 days ago. That will make your face melt. It's impressive. So just hang tough now. And remember too, this is a very important thing I read earlier within the community. The whole Doge circus will not kill Tesla. It's a loud sideshow being funded by a certain group. But remember, you cannot subsidize irresponsibility and expect people to become more responsible, from Thomas Sowell. Think about that. I'm not pointing to the specific meaning of this, but the world has gone down a very twisted path. And you should be very aware to everybody to be able to see this. Okay? So fingers crossed. The world will heal real soon. But I'm actually fine with the price staying where it is. But risks happens fast. Q1 earnings will be weak for Tesla. But then after that, we have a lot of good stuff on the horizon. So fingers crossed, we stay low for a time being. And shout out to the bat lovers in the world. This week we donated to Bat World to help support the care, food, shelter, medical for the following. Sully, who's an Egyptian fruit bat, was kept an exotic pet in a birdcage, but now loves an outdoor area with crickets and looking at nature and the moon. And tomorrow morning, DCA Live, we will be hitting that with the team, and I hope everybody can make it. And don't forget to subscribe. I'm going to dig a couple of quick questions from the audience as well. And thank you once again to all the mods in the chat as well. This was the Gilded Age Redux. We'll see if we are heading into that new golden age. The Great Escape from Team UK. No UK SIPP providers have access to Bitcoin ETFs. It's a government edict. Well, my goodness, I'm shocked that the British government is that way. They are stupid, in my opinion. Why do they not want their citizens getting access to Bitcoin? God, if I lived in a place like that, I'd lose my mind. Sorry. That is silly. So it looks like MicroStrategy is the option. But still, if you can time your MicroStrategy buys, you're going to be just fine. Thank you, The Great Escape, for sharing that. Doc Intern. Some MicroStrategy pundits on X saying if MicroStrategy closes Q1 with Bitcoin at less than 96K, it won't be able to erase losses of the last 3 quarters, so it won't qualify for the S&P inclusion. Is that true? Possibly, yes, it is true. Also, who cares about S&P inclusion? There's bigger things than that. The S&P inclusion has to come one day. It's like the ranked 250th largest company or something, 100th largest company. It's also ranked the 14th largest asset holder company. If you include cash and Bitcoin as the same, it's the 14th largest company in the S&P 500. And also, can you share the ARB cloud settings for MicroStrategy Bitcoin trades that you showed earlier? Yeah, I can share that later on Patreon. I'll share that too. It's a killer, and we'll actually have maybe Jacob do another video on that too. I am Colt, moving in with my in-laws for the time to slow the burn. Good idea. This is the time to invest. Again, be a capital allocator in this new golden age and control the burn. And then when you reap the rewards in 2029, 2030, then you can start spending like a madman. You can buy that boat and the motorbike and the luxury vacation, all that good stuff. CPK 2001. In the Retire on Cocktail video, you talked about the price targets 2030. Does this integrate with profit taking for companies prior to that date? No, it doesn't. This is just straight buying and holding out to that time. If you do rotation, profit taking, and pair trading, you can completely, absolutely revolutionize returns. And that's why for the last, year, 15 months, I've been working with a team on a new revolutionary model, which will be, it's definitely the hardest one we've ever done, but it's called the rotation model, so stay tuned for that. Now, thank you as well for your super sticker. Martello45, Doc Intern, Tostavin, The Great Escape, Viciously, Dirk Diggler, and Brayman. I love you all. Thank you, TNT Tesla, Sean Donnelly, K8, and the whole gang here. See you later. See you tomorrow. And I can't believe the UK doesn't allow Bitcoin ETFs. So sorry for you guys out there. Is there any way of actually, just thinking out loud, moving money to an offshore account and then investing there? Like Isle of Man, Guernsey, they got to have some way of doing it. It doesn't make sense. Anyway, I will personally dig into that because that's unfair. Thank you, everybody. Have a great evening, afternoon, day, morning, wherever you are, and a great week next week. Bye-bye.